So far, we have learned how to prepare cash book for main expenses and also how to prepare a cash book for petty expenses, the petty cash book. So you look at this main cash book, it has a column for the bank and a column for cash. So the cash amount that you receive, you record them. The cash you disburse, you record them. And sometimes you bank the cash and so on. So what happens at the end of any period, there is an officer who will come and check your cash book and see the balance, carry down, and do the physical counting of cash. That is how we reconcile cash. And then you'll find that maybe it is not the same. The amount that you have reported in your cash book is not the same as the amount of cash that you have. Reason being, maybe there is somebody you overpaid, ama ulimpea pesa bila change. Those are the reconciliation that you need to do. Okay? Yeah, maybe there is money you have given out that needs to be brought back. Those are the reconciliation that you do for cash. Very physical. But now, when it comes to bank account, our bank account, we operate it in our office, and also the bank, they will maintain your account as their customer, that is. Okay? So they have your record as your customer. Okay? If you deposit a check today, you record in your cash book. Okay? The same time, the bank, when they receive that check, they will record. Okay? Then at a given time, they will give you the statement, the bank statement. This bank statement will have the final balance there. Okay? That balance should be the same with your cash book balance. Isn't it? Because it's the same thing. But you'll find that normally, most of the times, almost all the times, those two balances, they are not the same. So, the reason why those two balances are not the same, they are the one that make us to do what? The bank reconciliation. And they send you the statement, mostly on monthly basis. Every month you receive a statement from the bank. You can also request it anytime. Then when you get that statement, you find that the amount that the bank is showing as your balance is different as the amount that you're showing as your balance in the cash book. There are various reasons or the causes of the differences between the balance as per cash book and the bank statement. And number one is a check received entered in the cash book. There may be delay in 1 day or two between the time of depositing the check and the bank processing that check. So when you issue a check today, when you pay a check, you have paid me. So for you when you have paid me, unaenda kwa cash book yako. You record here. Sindio? Yeah. This is salary. Okay? Nilipa na check. Then when I receive that check, then on Thursday, naipeleka bank money. Okay? So in that period, if you get the statement, especially tuseme umepeana hii check on that day. Okay? So record this is August 30th. Okay? But unakuta a bank, huyu mtu ataipresent kwa bank, then maybe take 2 days. So itaenda lini? Itaingia September. Sindio? Yeah. So when you're doing the bank reconciliation for August, this amount will be in your cash book, but will not be in the bank statement. So that is one. That is a delay or two, sending the check to the bank. Also, the cash book can show more balance than the bank shows. So as soon as the checks are issued, We enter them in the cash book. Receive a check today. You write it in your cash book, isn't it? In receipt, 76, customer member. Okay? On 28. Then you take that check to the bank. But inakuja ku reflect September 1st ama 2nd kwa bank statement. That will give a difference. Then also, we have bank charges. So we have said there are two instances. The check that you receive, when you deposit it, inakuja ina reflect the other period. Ama when you issue a check, then inakuja mtu anaipresent later. So these ones, we call them unpresented check. Unpresented checks. The checks that you have given to the suppliers, but they have not presented them to the bank for payment. Then you have the uncredited checks. Uncredited checks, when you receive a check and then you deposit it in the bank, then the bank takes time to put it in there, to process it. Then that check, we call it uncredited check. Because at this date, at the end of this month, that check will reflect kwa bank statement. So it had not been credited by the bank. Because you to the bank, you are what? You are a creditor, isn't it? So akikupea statement yako, the bank statement, whatever appears on the debit side of the cash book, if this is the cash book, whatever appears on the debit side of the cash book should appear on the credit side of the bank statement. Okay? So the check that is here and it's not here, we call it uncredited check. Then we have bank charges. Bank charges. So our banks, they charge for the service. And this amount that they charge for the service, we don't know exactly what amount it is due to your cash book, isn't it? Yeah, because to process a check, maybe it's 200, issuing of a checkbook and so on. So at the end of the period, wakati unachukua statement, ndio unakuta hapo umewekewa charges. Okay? Yeah, check clearing, sijui nini, bank charges zingine, okay? Na commissions, sometimes the bank charge commission if they do for you a certain deal, okay? So all these things, you cannot be able to reflect them here. So when they are reflected here, balance itakuwa different na iko hapa. So then we call them the bank charges. Okay. We have standing orders. Standing orders. Standing orders. These are the orders that we give to the bank. If you have routine expenses, come and rent, okay? Even some salaries then fixed. You order the bank. When it comes to 28th of the month, unalipa pesa. Okay? So what will happen here in the cash book, and this is the bank statement. So kwa bank, wakilipa standing orders watakuonesha, si ndio? Tumekulipia rent, tumekulipia subscription ya sports club, si ndio? Tumekulipia something else. But wewe hapo hawezi jua walipeka siku gani. Isn't it? Until you get the statement, that is when you know that expense is your mission. Okay? So the standing orders also, they make it to have that difference. Another thing, direct deposits. Sometimes customers, like the way you pay the fee, una deposit kwa account ya shule, unaleta slip. Okay? When you bring the slip, that is when I do it here. Okay? So somebody has deposited the money and has not brought you the slip. Haujaona. So you cannot post it here. But already itakuwa posted wapi? Kwa bank statement. Is it clear? Yeah, direct deposits. That's another thing that brings the difference. Then we have dishonored checks. Dishonored checks. The dishonored checks You may receive a check. Okay? You receive a check from a customer. So unaiweka hapa. That is a receipt. Okay? But when you take that check to the bank, it is dishonored. So it will not reflect. Okay? So first of all, let's look at the reasons for dishonored checks. 1, not sufficient funds. If a client issues you with a check and he doesn't have sufficient funds in his account, that check will not go through. Okay? Na wewe hujui. So wakati you receive check, usiweka kwa cash. I receive check from a client. But ukipeleka bank haikwenda through kwa sababu account yake haina pesa. Okay? Another thing that makes check dishonored is incorrect spelling of the names. Okay? Incorrect spellings. Other things that make checks to be dishonored: dates. It's the dates. The check should not be more than 6 months old. Okay? So your date itaangaliwa. Sometimes we issue post-dated checks. I can give you a check today. Okay? Na nimeiandika 30th September. If you present it to the bank today, haitakuwa honored until your date ifike. Those one we call them post-dated checks. Unaelewa? Yeah. Then naweza nikakuissue check kwa office, unaona vile account office iko na so many documents. Check ipotelea hapo. Then all of a sudden you own 6 months later. Even if you take it to the bank, it will not be honored. Okay? Then another one is incorrect, maybe difference in the amount in figures and words. Okay? Yeah. Another one, signatures. Signature of the person who is issuing the check should be the one that is in the bank. Okay? Another one, if the check is disfigured. Yeah, it is defaced. We call it defaced. So ukipewa check, you should not wrap it vibaya. Kitambo tutakuwa tunaikunja even once. Nowadays they accept it ikikunja once. The other time ilikuwa inaenda ikiwa straight. Those are the reasons for dishonored checks. Okay? We are looking at the causes of the differences. And we have error. Okay? If you make an error when you are entering the cash book, definitely itaonekana kwa bank statement.
Yeah.
Or vice versa. The bank can also make an error on their side. Okay? Yeah. We have automatic withdrawals and deposits. They are working like standing orders. You have automatic withdrawals. We have people who have given permission to be withdrawn anytime, okay, without our knowledge. Those one will be reflected in the bank statement. They will not be in the cash book. So, the reason for the difference. I think I've exhausted all the reasons. If there is any reason that can come up later, I can just put it down. Then from there, let's look at the format. When we want to do a bank reconciliation statement, first of all, we do what? We adjust the cash book. We adjust our cash book. So, you pick your cash book, you open it, then our cash book will have a balance brought down. It can be on either side, depending on the nature of the month. And sometimes you can have an overdraft, or we can have some amount in the account. So whichever side, it doesn't mean that the adjusted cash book has balances on both sides. It is on either side, one of them. Haiwezi kuja on both sides. So we can call it adjusted cash book or updated cash book. You put now the items that are appearing in the bank statement and are not in the cash book. So all items. So here, so one of them, it is like bank charges. Those are expenses. We have what else? Standing orders. We have, maybe there was a dishonored check. Maybe there was an error. Okay? Yeah. All of them, the ones that we have stated earlier. You look at the items in the bank statement, not in the cash book. Then also, you can have direct deposits. Utaziona kwa bank statement, haziko kwa. Yeah. Sometimes kuna errors that affect this side. You look at the kind of the error. If it affects on that side. And that, with all those items, you do what? You get your balance, carried down. Then you close the account and you go ahead and do what? You now go ahead and do the bank reconciliation statements. So once you get this balance here, then you come here and do the bank reconciliation statement as at. So it is have dates. You do it on monthly basis. Okay? Yes. Yeah, so even this one, it has a date. Come on, you have to do it. It's not the same like a March. Okay? So our bank statement, it is there. Okay? You have compared it with your cash book and found out this. Okay? Yeah. And then you have come up with a new balance carried down. It can be on either side. Yeah. So you start with it here. Balance as per adjusted cash book. Here the figures are in shillings. Usisahau kuweka in shillings. Hizi mistake, they penalize. Okay? Yeah. And your marks inapata there. So our adjusted cash book balance is this one. Okay? Yeah. You put it. Okay? So if it is on this side, inamaanisha hiyo ni overdraft. Isn't it? Yeah. So when you do your practice question, you will find that there are some of them will be overdraft. You start with a negative figure. Okay? Negative figure in accounts, you put it in brackets. Then you add what? Unpresented checks. These ones, they are in your cash book, in your original cash book, okay? But they were not presented in the bank. So there is no evidence in the bank statement. So the items that are in the bank statement and are not in the cash book, let's say now the items that are in the cash book but are not in the bank statement. We have a presented check. We gave somebody a check, but hajaipeleka bank. There could be many. If there are many, you put a column here. Okay? Yeah. You list them by names. Okay? Mm-hmm. You find all of them. Okay? Then if it is just, you can work it also elsewhere and bring one figure here. Okay? You can add them elsewhere. Okay? Yeah. And then put one figure here. So if you add this and this, you get what? This. Okay? Then the other thing that you're going to do, you less what? These are the checks you have received. They are in your original cash book. Okay? But the bank has not reflected them in the statement. Okay? Yeah. So they have not been credited. If there are many, you list them in this column. And then you transfer here one. Or work them out elsewhere and bring here one figure. If you less this, the amount that you're going to get here is your final amount. And this is the balance as per bank statement. Now it's clear, isn't it?
Yes.
That is our bank reconciliation statement. Another way of doing it, you can start. You already have a bank statement. The balance that will be here should be the same as in the bank on the report. Okay? You can start with that balance. Okay? You can start with the balance as per bank statement, balance as per bank statement. But this time now, you will add what? Uncredited. Get the difference? Yeah? Yeah. It's a very nice topic to put a time. If you get this question in the exam, ensure that you get all the marks with minimum time so that you get time to do the other manufacturing and the others. So you add this, then you less what? Unpresented. List all of them, put the final figure here, this is minus, then what you get here will be balance, yeah, as per adjusted. This balance should be the same as this, okay?
Yeah.
Ukitumia the other format, this balance should be the same as the bank statement. Then now you start your new cash book for the next month using this balance. Okay? No, using the bank statement balance. Yeah. So mostly use the other format, the first one.
Okay.
Yeah. Practice just using one. Instead of doing the both exam, practice using the first one. So that the balance as per bank statement, it will be now the opening balance of the new cash book in the new month. Our illustration comes from April 2023, question 5b. On that April 2023, Mutua Mule, a sole trader, received his bank statement for the month of March 2023. As at that date, his bank balance was 7,937,500. So these are the facts that you can get the dates. This is that. So we are reporting for the March on that April. That is when the statement came. So at that date, the bank balance was 79,37,500. Then his cash book, 11,832,500. Then, upon investigation, his accountant investigated the matter and discovered the following discrepancies. So whenever the statement ikifika, the first thing we kwenda through, okay? You investigate and see the reason for the differences. Number one, there was bank charges. Number two, the check drawn to Mutua Mule amounting to had not been presented to the bank. Then the receipts And Mutuamule's opening cash balance of 1646 to 50 had been brought forward as a debit balance instead of a credit balance. Then you are required adjusted cash book, and then the bank reconciliation statement. The name of the trader, this is a sole trader, Mutuamule, as at 31st March 2023. Now, the column for the amount here and the column for the amount here. Our balance brought down is 11,832,500. Yeah, now you can see it. Okay?
Yeah.
The first thing that was revealed by the investigation, there was bank charges that were not entered. Okay? Put them here. Bank charges 15,000. Then you can see the receipts of 132,500. Receipts 132,500. There is also standing order 310,000. There is also what? It was written as?
It was written as 794.
794. Minus, get something like that. Then we also have what? Additional check of 75,000. Then
1,646,250.
250. So this amount, it was debited.
Yeah, it was debited
instead of being credited. So now if you want to credit it here, you put here 1,646,250. But then we just cancel the error. There will be no entry here, isn't it? So you have to put it twice, isn't it? So that it remains effective. 92,500, and that is it. Opening balance error. So the total here, this is 12,010,000. Put it on both sides. Then the difference, you call this side, eh?
It already is here.
Yeah. It's here. Our adjusted balance carried down will be 8317 500. So this is the adjusted cash book balance. So if now you come to the part B, the bank adjusted cash book balance shillings 8,317,500 presented, amounting to what? 112,500. You have to get what? 8,430 less 492,500. You less you get what? 7,937,500.